The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 10th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Internationally, it will be 727-445-1044. Of course, if you can't call in, you can always send me an email, steve@tfnn.com. Inside that heading, just put radio show question, and, of course, inside the Tiger's Den. Well, any ping will do, Vasily. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 131 points at 21,918. The S&P off 23 points, or about 1%. 2450 is what she is printing. NASDAQ 100 down 1 0.6%, trading at 58 1/4. Russell 2000 off 18 points. Semis down nearly 2%. Spot volatility index up 30%. You know what that means for tomorrow. Well, of course, it always depends on what the close is today. That's straight out at $14.50. Gold is up $11. Silver's up 20 pennies. Light sweet crude back 84 cents. To the upside, leading the charge dollar-wise, it's Perigo Company up $11. Galapagos, it is Galapagos up $6.50. You've got Live Nation up $3.45. RCI Hospitality up a couple of bucks. Chef's Warehouse up a couple. Priceline, another bad day for it, although much lighter than yesterday, down $42. She's trading out at $18.65. Americo down $28 or 7%. NetEase off 27. Amazon down 21. Masonite International off $16. Google off 13. So can you say Gartley buy pattern? Let's go take a look at what's going on the intraday charts out here. Let's start with taking a look at we're going to work our way up time frame wise. Let's take a look at the 30-minute chart out here. Now, what you're going to see from the high that came in out here on August the 8th, you're going to see what we'll call a perfect A to B equals CD to the downside. Last night, so we knew about yesterday's bounce, right? You and I took a look at that pattern out there, price moving lower, doing less relative energy. We saw that bounce coming into about 630. It wasn't nearly a 0.618 retracement. It was 56% to be exact out there. That's at the C point of the move lower, which we've seen. As we were coming on the air at 1 p.m. out here, you had a nice little hammer candle complete at that 1-to-1 price projection, 58.1350. We're now seeing a bit of follow-through to the upside. You like to see follow-through on a hammer candle or the opposite, a shooting star. As of 1:10, we've got 20 minutes to go. We're seeing some follow-through. I don't know whether we're going to have follow-through at 1:30 or not, but we're going to be able to take a look at it. Now, that would be step 2. Step 3 would be turning up the price oscillator on the bottom panel of our screen. We know that would turn up if, in fact, or when we would see a price close above Stevie's red line. Right now, that's measured at 58.43. Again, we got to take this in increments, but you have the first signal of at least an intraday bottom that is in place, a solid pattern for those of you that like to trade the HM Gartley. And it's a Gartley buy. You're going to see Gartley buys as we move over into the larger time frames out here. Let's take a look at the 2-hour chart. Now, this is a different A to B equals CD pattern because this takes us all the way back. Is it 59.72? Is it a different one? Is it? It's not. That's the same A to B equals CD pattern out here, just on a different time frame. So because now this 2-hour session, this candle doesn't complete until 2 p.m. So on a 2-hour time frame, do we have a completed pattern? No, we do not. But if we did get a bullish reversal signal here, then you'd have two. Because of when we get off the air, I won't really be able to look at it at 2 p.m., but that's what you would want to be taking a look at on your system. Now, that's in the NQ. We're going to go kind of back and forth. Let's go now up to the daily time frame. And on the daily time frame, this is what's really critical, or I believe that it's critical. Maybe it's not as critical as I believe that it is, but it certainly should be. And that is that right now what we have is we have a level of support that has been busted. And that's the bottom of the TAS daily profile, 58.72.90. We're at 58.27. Now, we haven't seen a close below the bottom of the box. We actually did see, so let's see, how often have we seen that? We saw that back on March 21st, close below the bottom of the box. We saw that that lasted for about 4 days out there. We saw another instance back on April 13th. That was a one-day wonder. We saw another instance back on May 17th, another one-day wonder out here. So it is doable and possible. We saw below back in July. We saw that was like a 4-day wonder. Now, that gave us a nice A to B equal. That gave us a really nice Gartley buy pattern on the daily time frame chart out here. The actual confirmation came in on July the 7th. We don't have that pattern here on a daily basis, meaning an A to B equals CD to the downside. I mean, you could draw one in. On the shorter time frames, yes. On the daily, not so much. But here's the deal out here. Well, let's do this. Let's go take a look at the S&P, and then we'll come back and take a look at that, and then we'll do the Dow, and then we'll go to, well, here's the deal, and that deal being that spot volatility index where it's trading. Here's the ES Mini. Again, a nice little A to B equals CD to the downside. You have wave number 7 that occurred, but in this case, we don't really have a bullish reversal candle. We did on the NQ. We don't on the ES. So it makes it a little bit stubborn, and you have to have a sign that the cavalry has arrived. So watch the 2452, or we'll watch the 2452 area, and we'll take a look at the A to B equals CD down pattern inside of the 2-hour chart out here. So let's take a look at it. I believe this is the same time frame. 2488. Let me just make sure. 2488. And so we'll be watching this. You can see the A to B equals CD down pattern here. We'll be looking to see if we get a bullish reversal signal. Now, if we don't, what does that mean? That means that the pattern extends lower to the next price projection level. Inside the ES Mini, that's 2436. Not necessarily an important level to be paying attention to, but you want to understand where your downside targets are, where your upside targets are. And as we take a look at the daily chart out here, you're going to see the key level to be watching at today's close, at least I believe that it is 2453.90. That's the bottom of the daily box. Or is it, with the spot volatility index up 30%? What do you think the odds are that at least a buyable bottom, bounceable bottom, is being formed with the spot volatility index being up 30%? Some people out there might think all holy heck is breaking loose, and it just means that the markets are headed lower. Well, when we come back from this break, we'll give you something to think about. Steve Rhodes with TFNN.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 137, S&P down 24 down. That's the spot volatility index out there. It's up 32% as we speak right now. And most of you that have been listeners for a long time, subscribers for a long time, you're very familiar with this chart. And this chart here identifies two different things for you, really. The arrows in blue, those are days where we see a one-day rate of change in the spot volatility index greater than 10%. Now, what you and I know is that the probability, 90% probability that the following session is either going to be a bounce or a bottom, not a continued flush to the downside. That says, hey, 10% of the time you do see some additional follow through to the downside. Now, on panel number 2 on my screen, you're going to see I've got just simply a 35% number out there. That's just something to be pulled out of thin air. It doesn't have to be 35%, but you can see some of these days where you see those big spikes out here. Even, by the way, on the 10% of the time where it doesn't work the next day within 24 hours, it works the following day. So within 48 hours, it's a really great tool to understand that. So if you're a short-term trader, you're really paying attention. If you're a long-term trader, you're paying attention. You're looking for different types of patterns that are going to go ahead and complete. And at this stage today, we're at about 31.5%. 2 days ago, by the way, we had closed just above 10%. So if we take a look at this session right here, this is on August the 8th. Today's Thursday. This was Tuesday's session. The actual reading was 10.37. And what ended up taking place yesterday? Okay, we saw a sideways move when you really compare close to close inside the S&P 500. In fact, inside the newsletter, what I had yesterday morning said to subscribers was because we were at the highs out here and we had just had a one-day rate of change of 10%, that I really didn't think that the normal trading rules would apply. It did. And we took a look at those other patterns, trading rules, meaning that we would see some type of bounce. And in essence, a sideways move is good enough for me in that case with regard to what this tool will do. And so you should anticipate the same. Now, here's the deal. I don't know if the Gartley buy pattern they looked at in the NQ is going to take hold or not. We know what the next steps to be looking for. Stevie's red line out there, and if you see that, then this whole thing could change. It could be by the end of the day where you're back below 10%. Anything is possible out here. But the thing that's most impossible, and let's just say we have a horrible close. Let's just say things just really get crazy out here and have a horrible close. What it does is it increases the odds within the next two sessions. Now, that's going to be Friday or Monday that you're going to see some type of bottom that forms inside of the marketplace. That's just it. And, so a lot of people will sit there and talk about when the VIX is low, that what's going on, it's complacent. You can't trade complacency. I mean, I guess you can. It hasn't really worked for most out there, but there are so many other valuable tools that the spot volatility index provides you and I with information. These are the things that we look for and you don't want to ignore. Now, yesterday, you and I were talking about the New York Stock Exchange, and we were discussing the minus 150 line. So let's move over there. We did not close at minus 150 yesterday. We closed at minus 147.20. Pretty close. That was also 1 day away from its all-time high intraday out there. Now we're at a reading of minus 237.4. Last time that we were down at these levels out here, well, that was back on March the 9th. Let me do it like this. Here's March the 9th. What did you see that took place? You most certainly saw a bounce or retest of the highs out here. Again, this was an all-time high back from March of 2017. Should you anticipate and expect the same thing? There's no reason not to. At a minimum, what you should be looking for is some type of retracement out here. The signal, is it going to come from the New York Stock Exchange? No, not really. We have to look at the other patterns that are forming, in my opinion, inside the equity futures contracts to give us those. That's where you and I are going to get those early signals. That's why you and I, as we came on the air at 1 o'clock, we just do our normal strategic evaluation of, okay, market, what are you communicating to you and I? We know about these patterns, right? There's about a handful of them that you and I like to really trade to give us the message of the markets. And what we don't do under any circumstances is ignore those patterns. What we do is we identify them, we figure out, okay, where's the next piece of information that we're looking for as we put together this jigsaw puzzle of the markets out here. So now you've got a situation where the spot volatility index has a 90% probability of seeing some type of bounce or bottom inside the S&P 500. You get the New York Stock Exchange 2 days, that's it, 2 days off of making a new all-time high on an intraday basis out here. And you're already in the oversold situation. It's amazing. It's amazing out here. Now, of course, there is the other side of the picture that I am just absolutely completely wrong. All the tools of the past are just simply going to fail, and they're not going to work. And that's a possibility. And if it is, we'll look back at this and say, you see, the market just really never lets you get out. Because that's really what bear markets do. Now, we don't have any of those bear market patterns inside any of the indices out there that we would normally see. But I just thought I would just throw that in there just for fodder, just to keep Mr. 666. He's back. He's back. He sent me an email. I'm not going to give you his name because that would just not be appropriate. But we do have somebody calling for 666 in the S&P 500. But we've got others that are looking for other information. For example, Tom is long the TVIX. Great. I sound like a broken record with the TVIX. No, you're not a broken record. After trading this a few times yesterday and today, I'm now out again and looking for return entry on a pullback. Any thoughts? Or on the VIX or the market. So I think, Tom, maybe I've answered that question for you. Great job. I like the fact that you got out with the spot volatility index being up where it is out there. With regard to the bounce, boy, that one would be difficult if you are of the real bearish orientation out here. What I would do, since it is, well, let me take a look at the Dow. Let me look at the Dow and see what it did. So the Dow gave us the bullish reversal signal too. Here's the 30-minute chart for the Dow. Now, not that it's really the S&P, right? That the VIX index is trading off of, in essence, S&P options, SP 100 options out here. But nonetheless, it's a matter of being able to identify these patterns. So here's the A to B equals CD pattern inside of the Dow. We know that we did get the bullish reversal signal, a piercing pattern. That was at 130. As of 125, we're getting an additional follow through. I'm going to get rid of the A to B equals CD pattern out here. And what the Dow is doing, which has been a strong indice out here, is testing Stevie's red line. So what I would say, Tom, is if we get a close above 21,907, there's more bounce, at least in the market, inside at least the Dow. And that next level you'd be looking for is 21,933. So if you believe that that this is nothing more than just a short-term bounce, then that next level to be looking for, if the YM is able to get above this 21,906, would be look at it from the 21,933 level. And inside the Qs, or not the Qs, but the NQ out here, that number to be watching is going to be 5843. That could be the place where you would fire away, but you close above it, you'd be firing blanks. Steve Rhodes, TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 116, S&P down 22. So for Tim writes in and says, Steve, would this be a good price to add? Ticker symbol CLNS. So let's go take a look at CLNS. And yesterday, what I shared with you is each time you ask about a equity, I'll make sure that we post this screen out here. This screen shows the daily, weekly, and monthly TAS market profile levels out there. So they're excellent tools to help identify support and resistance. So the first blush at this, take a look at this, Tim. The daily is always going to be in the left. The center is going to be the weekly. The very right-hand panel is going to be the monthly. What we can see as of this, just using those, so that's going to be one of the tools that we always use to help us, in an instant, try to provide some support or resistance. Well, the daily process, first you've had two wide-ranging bars, very wide-ranging bars to the downside. Markets don't end on wide-ranging bars. You can see you've got a wide-ranging bar on a weekly basis out here forming. Both daily and weekly are below market profile. So that says you then target either a retracement level or certainly the next swing point out here. On the weekly base, you can see that we're already trading into the swing point. It's touched it. That's the week of April the 3rd, 38 million shares. You've done 15 million shares today. So in essence, you're coming in there somewhat light, but any close this week below 1333, you're at 1339 right now, which suggests volume or not, you're going to go test the low of that swing point while you're trading inside there. Now, on the monthly chart out here, the market profile says 1225 would be the number to be paying attention to. So, Tim, I would write down 1225. Might be a spot where you would consider adding that position. If we come back here and we take a look at the daily chart and we just explode it out a bit, we're going to see that down on the trading session of May 4th, the low there was 1258. 1258. That's your hammer candle. I don't see any other bullish candles really out here as this equity, Colony North Star Inc. is really headed to the South Star. And the South Star on this chart is going to be that hammer candle out here. It's also basically a swing point. You can go back a little bit further and find another swing point, April 6th with 12 million, April 7th area, 6.2 million out here. So that is going to be the range that you are targeting. So watch the equity. As it gets close to those levels, right back to us. And then we'll go ahead and we'll take a look at it and see if there's anything else that we see out here. This equity hasn't been around long enough, so on a monthly chart, all we know that somebody's holding it at a price point of around $24.91, and they're not having a good day. They certainly didn't have a good day when it moved down to the lows and got down to $9.17 out here. So, yeah, and what that says then is even if it were to hold in that 12-ish range. Now, look, here's the deal. You get below 12 and a quarter, you can get all the way back down into the swing point from February 2016, 917 to 1205. So be careful here. I'd say be very careful with regard to this equity. And I don't know what Colony North Star Inc. does, but you must have a real good reason to want to buy this and believe that it's going to head higher out here. But the shareholders, the people buying and selling stock, are not necessarily have not bought into that game. Again, that was for Colony North Star. Tim, thanks for writing in. I hope that helps you out. Let's go to next question out here. This one comes from, where did it go? From John in Sarasota. Do you see a bottom for the IWM? So let's go take a look at the IWM. And what I would say, John, is the same thing. I didn't mean to ignore it, but the same thing with regard to, well, hey, I can do that for you here too, by the way, right? He wrote in, I said I was going to do this. Well, it gets you the daily, weekly, and monthly numbers, by the way. And the daily, hey, well below any type of TAS market profile support. That was 139. The weekly has 133.89. And the monthly says the top of that box is 129.10. So I'd write down on a pad of paper 133.89 and 129.10. Those are potential areas. But then what I would also do is go back into the equity futures contract. Unfortunately, I think it's a 10-minute delay here. But what we can see is the completed A to B equals CD pattern on a 30-minute basis, so it appears, because we have a nice little bullish engulfing, three-river Morningstar, and prices contending with Stevie's red line, which is priced out at about 1381 is what we'll call it. So I don't know on that 10-minute delay on the Russell 2000 if we are above that, but if we are above that, John, that's giving you a signal of at least a bounceable type bottom, whether that is, and I don't know what the time frame it is, John, that you're looking for on the trade here. But on the 30-minute basis, if you're an intraday trader, you're starting, you're getting signals on each of the equity futures contracts out there. So now you've got 4 of them and levels to be watching. For example, inside the ES, the level you're watching is going to be 24.51, 24.52 as a number out there. Right, you get above that, and that says okay, check mark number 2. With regard to the IWM, we can see that on a daily basis, it has completed the A to B equals CD pattern, at least the 1-to-1 version, and that would be starting with the swing point out here from July 25th as your A point, your B point down here on August 3rd, your C point out here on August the 8th. So the price projection there, John, was 136.70. That certainly qualifies as a Gartley buy in a textbook. I wouldn't sell you that textbook. I would say, not so fast. You really want to see the cavalry come in, because that's a Gartley buy. And as you know, every Gartley buy has 5 potential outcomes out here. And the only way that you will know if this is a completed pattern is to see some type of bullish reversal signal. You don't get it today, you be patient and you wait till tomorrow to see if you get it. You don't get it tomorrow, price goes lower. Well, your next A to B equals CD target, John, becomes at 135.32 level. So we were talking about the 133.89 as the weekly bottom of its box out there. So the pattern has hit objective number 1 in the A to B equals CD pattern. The intraday chart time frame, 30-minute, has given you the first signal of a bounceable type bottom. The 2-hour chart out here, as we take a look at it, again, this doesn't complete until for another, 20 minutes out here, 22, 23 minutes out here. I could form a hammer candle on a 2-hour chart at the end. Again, you got to wait. You just have to wait for the signals. So the question was, do you see a bottom for the IWM? I see potential bottoms as we speak right now. At the end of the day, we'll have more information, and maybe just write me back tomorrow and we'll take a look at it as well out there. So at this stage of the game, it's trying to set up a Gartley buy pattern, and that was the IWM, courtesy of John in Sarasota. I think I've gotten all the messages or all the requests out there. I don't see anything inside the Tiger's Den. Hey, you guys and gals are very quiet inside of the den, or I guess perhaps I'm putting you to sleep, or maybe you're watching the PGA Championship. I saw earlier that my neighbor, Gary Woodland, he lives 2 doors away, that he was leading. He's been playing pretty well, but hasn't been able to pull off a big one out there. I don't know. Is he still in the lead? Nope, he dropped out. Looks like he's -3. The lead right now is -4 out there. So let's go take a look at Goldilocks. I am shocked and surprised nobody has sent me an email or request or anything with regard to, hey, Steve-O, what's gold doing? So let's go take a look at gold. Let's look at gold first when we get back from this break. We'll go take a look at its market profiles, try to figure out where support or resistance is, where it might be headed, and, of course, anything else that you would like. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Dow is off 129, S&P down 24 points. Gold's up about $12. So we're going to start off taking a look at gold. Here are the four different time frames and their market profiles that you and I follow. So the left-hand panel chart there is the 60-minute time frame. The one next to that, 4-hour, 240-minute. Then you've got daily. Then you have weekly out here. Now, if we take a look at the 60-minute time frame, we're going to see that we're trading inside a new profile. 1289.40 is the top. 1285.30 is the bottom. As long as 1285.30 holds as support, then gold should continue to move higher. Now, it has to clear that 1289.40 level. That's what you would be looking for. But on a shorter term time frame, we're going to call it the hourly time frame, everything still looks bullish out here. There's no bearish signals or signs. Same thing on the 240-minute time frame. There's nothing here on the 240 for us to pay attention. You can see you've got first day we've had in quite some time, a nice little green shoot, so to speak. In other words, price is above resistance, that being the top of the box out here. Now, we do have some overhead resistance from a daily chart perspective. And in this case here, I'm just using bar charts, so it's hard to make out which of these are necessarily Japanese candlestick reversal signals, because we're not really showing candlesticks out here. But in looking at this, what we know is on this trading session, because of the open and the close, that trading session, by the way, April the 19th, that qualifies as a bear sash candle. So that tells us that we've got resistance at the high of the, in essence, preceding candle. If we put a yellow line across the top of that high as resistance, that is at the 1300, almost 1300 even level, we can see how important that resistance level is. And the reason that we say that is because the last time that we were up here was June the 6th. And June the 6th, and being able to understand your Japanese reversal candles, it's just the way that the market communicates to us. It's the way that the buyers and sellers have but one role out there. And that one role is to provide us with signals that really have important meaning. Now, there's more important meaning at support and resistance, in my opinion, or as you're completing a pattern out here. And it's not odd or uncanny how these levels work. So we've gotten up to a high today of, what was it, $12.90.40, $10 higher than that high. $14 higher than where we're trading right now is a key level of resistance. Does it mean that it's going to hold as resistance? No, it doesn't. Not necessarily. If it does, it shouldn't be a surprise to you. It shouldn't be a surprise to me. It won't be a surprise to you, and it won't be a surprise to me. Now, the cool thing would be if we were to see a close above it. I'm still long the gold contract. If we were above the 1,300 level out there, then that old resistance should become new support. That's how it works out here. But what we do know is that gold is approaching a resistance zone. Is it going to get up there? I don't know. It looks like it wants to. Of course, we have other factors that we have to consider out here. Now, on the weekly time frame chart out here, that was the daily we were looking at. The weekly chart shows us that at 1293.60, and the high today has been 1290.40. So you're talking about $3.20 out here. That's a real significant resistance level. So now we've got two numbers to pay attention to for gold to reveal what its next moves are going to be. 1293.60. And that $1,300 level. So we got $7 worth of resistance that gold will need to blast through. And if it does, boy, then that is sounding the horn, Paul Revere, riding through the charts of your screen and mine, saying the bulls are continuing to come. And that would mean price would move higher. And that would mean you've got an A to B equals CD, right? You've got the A to B equals CD potential pattern. You've got a clear resistance out here. That pattern gives you at least the one-to-one price projection of 1323. That's the daily chart that we're looking at, 1323. Or 1342 or 1366. But none of those prices are going to come into being until price is able to get over 1300.6. Am I saying it's not going to? No. But what you and I need to definitely understand in this game of, hey, where are the bulls and where are the bears? We just need to know where they're at. If we go take a look at the Japanese yen, actually, here's the 30-minute chart for the Japanese yen. It's trying to complete at least its own one-to-one A to B equals CD to the upside. That says it wants to move up to 91.96. That should push gold higher too. But let's just go take a look at the gold contract and not worry so much about the yen right now. And just go see what type of message on a shorter term, because we looked at 60-minute out there. Let's go take a look at the shorter term, the 30-minute time frame, see if there's any kind of signals out here on it, right? We're looking to, now that we know we're getting near. Oh, what do you mean? Oh, this is a bummer. Oh, there we go. Okay, we got it. Okay. What the heck happened there? There we go. Come on, get back here. Okay. So here's the 30-minute time frame chart. Sorry about that. System gone wild out here. Let me do this. There we go. So as we take a look at, so that's kind of interesting. Cool and interesting. On a 30-minute basis, we got a TD sequential count at this stage of the game, the actual high that we have seen intraday out here. So that took place, looks like, right around 10:30. You'll see both the red number 13 and a blue number 13. That's how the blue one is the TD sequential. The red one is the TD combo. We do have price below Stevie's red line at 1291.90. So it gets very bullish to clear an area that is a reversal level inside of the gold contract out here. A pullback, by the way, as we take a look at a 30-minute chart, should there be one. Not saying there's going to be, but you do have, we can understand now why gold has tailed off a bit. One of the reasons out here. The level of support would be right around the 1283 level, and that's looking at the 30-minute time frame chart for Goldilocks. Let's go see how those miners are doing out here. The GDX, as an example, which is up nearly 2%, 42 cents, $23 and change is what it's printing out at. Let's go take a look at its market profiles out here. Let's begin by evaluating this. So this is also running into resistance on its daily time frame. That number is 2309. Now, the last time that the GDX was up at these levels was on the trading day of August 1st, 32 million shares. You got 25 million shares right now. So that's nice because price is moving into a swing point with volume. So if, in fact, the GDX could close above 2309, that's the swing point high from August 1st. That's the top of its TAS daily profile, which, by the way, has a bearish structure to it. We know that because that point of control at 22.75 is closer to the top of the box. If you clear that, then you've got an A to B equals CD to the upside because you're going to have the volume today. So a continued push higher inside of gold, inside of the GDX, would then give you an A to B equals CD pattern with a price projection, minimum price projection of 24.11, and then 24.68 would be the next target. But it's got to clear those levels of resistance out there. On a weekly basis, you've got a bearish structured box, but 23.61 is its next target. That's the point of control, and then 25.35 after that. On the monthly time frame chart, 25.97 would become its next target, and that is the GDX, courtesy of Wilbur Chevrolet. I don't even know where that came from. Dow's down 138, S&P's off 26. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. This is going to be a quick 2 minutes. We got 3 questions that have come in. Try to get those questions in earlier so I don't have to rush you. But the question was on Apple. Hey, where is there good support out here? Where is it headed to? If we take a look at the daily, the weekly, and the monthly profiles, you know, you want to We're way above the daily. We're way above the weekly. The monthly top of the box is 156.65. So we're not really providing a whole lot of information here. What I would suggest is if I put this daily chart out here for Apple, you're going to see so far what it's doing. It's testing Stevie's red line right at about the 156.40 level. If you close below 156.40, James, then what you're going to watch for is to see how does it tomorrow, if should it continue lower, deal with the price point of 155.02. You get below 155.02, you come back to the area where it broke out at. It would really be as simple as that, and that's the high of 150.22. That's the quick take on Apple. A question with regard to U.S. Steel. X is the ticker symbol. Steve, is there a buy on U.S. Steel? If you can take a look at just simply where our market profiles are, so if we spot those, on the daily you are above the top of the box. On the weekly, you're above the top of the box. And on the monthly, you're not even up to the bottom just yet. You do have on this weekly chart, though, this big, huge shooting star out here. So you've got some pretty decent resistance. And we can see off of that high, which had 48 million shares, it was the light million 21, then 34, 15. Is this a buy? That's an interesting question out here for U.S. Steel. Let me put on my other chart and see where the Stevie's red line is out here. If it is above this 23, you're sitting here right on it. S&P, it might be. It might be. It might be. Yeah, I mean, that's about the – that's be careful. Be careful out here. But, yeah, it's holding up pretty well. And, in fact, it might be a buy as we take a look at it right now. The last question was to take a look at soybeans. Here's what I can do for you on the soybean futures contract. Here are your TAS market profiles. We're below everything. The 60, the 240, the daily, but not on the weekly. The weekly says 921. Have a great Thursday, folks. We'll see you on Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.